Inflation in the US has decreased to 8.5%, even while it's lower than the 9.1% in earlier months. That's still a lot, so it's not exactly good news. In actuality, the economy cannot run smoothly at this rate. J.P. Powell, the chairman of the Fed, insisted that inflation was not a problem, while continuing to create trillions of dollars. View this graph. Months after months, inflation remained on the rise. The Fed made the decision to keep the public in the dark, while being certain that there would be significant inflation. Naturally, they had a good excuse for doing it. A virus that affected people was spreading over the world. They printed trillions of dollars because they couldn't take the chance of letting people return to work. However, as soon as Russia invaded Ukraine, the virus began to degrade it in some way, and they stopped printing trillions of dollars. Consider the number of instances. Right before the invasion, there was a substantial increase, and then there was a sharp decline in the number of instances. People are now back at work and are not as concerned about the pandemic as they once were, treating it like any other illness like the flu, regardless of whether they are Trump fans or conspiracy theorists. Some individuals made a huge issue out of Trump treating COVID like a virus. There would not have been so severe inflation in the first place if the government had chosen to open the nation and restart the economy rather than printing trillions of dollars. How do you profit from inflation? They must adjust to the situation and figure out how to take advantage of the catastrophe. On the internet, there are countless experts and perspectives, but some advise listening to Warren Buffett, the greatest investor of all time. The nation has had crises before, and this one will undoubtedly not be the last. Given that Warren Buffett is almost a century old, he has experienced numerous times of inflation. Warren Buffett's strategy to make millions of dollars when there is such high inflation. The first and most crucial piece of advice from Warren Buffett is to be exceptionally good at something. That doesn't sound like advice you want to hear. Most likely you were anticipating making an investment in this business or purchasing that shares, but in reality most people lack the financial means to invest and are content to sit back and watch as millions of dollars, or even just a few $100,000, fill their bank accounts. However, people are typically good at this, exchanging their time for money. Since elementary school, we have been instructed this. Since you only have so much time, that's obviously not the best way to produce money, but it's the only thing you have complete control over, and no one can take it away. Therefore, investing in yourself and excelling at anything you do is the best way to protect yourself from inflation. Whether a doctor, engineer, teacher, or anything else, because the need for fundamental abilities will always exist, regardless of the type of crisis we are experiencing. Simply because going to the doctor is expensive, people won't cease doing so. No matter the cost, people will go to the doctor, and in times of severe inflation, those with the expertise may simply raise their charges without significantly affecting demand. The only issue is that you should carry out this action prior to inflation. Therefore, it's a little late considering that inflation has been there for more than a year and has recently increased to over double digits. Consider investing in yourself and your skills and becoming an expert in your field if you want to be ready for the next inflation. Be the top lawyer, educator, or surgeon. Warren Buffett offers the following advice. He claimed that a wonderful business, which he defined as a business where the items are in high demand, even if the company has to raise prices, is the second best kind of defense, regardless of how much we despise it. Inflation is a normal component of the economic cycle. Whether you like it or not, it will still happen. Another reality is that not every company will succeed. The cost of their goods or services will increase owing to inflation. Thus, many firms will suffer when they start raising prices, and if they don't, their earnings will decline. What are the businesses that can withstand inflation? Buffett may have put it all in the clearest possible terms in a 1981 letter to shareholders when he stated that businesses with a propensity for withstanding an inflationary climate must have two characteristics. 1. A relatively simple ability to raise prices, even when product demand is flat and capacity is not fully utilized, without worrying about significantly losing either market share or unit value. And 2. A relatively simple ability to accommodate significant dollar volume increases in business, often produced more by inflation than by real growth. He is essentially suggesting that people will continue to purchase bread, even if a company raises its cost, since it is a necessity. Nothing will change as a result of it. The company can expand and change with the times without making a substantial additional capital commitment. For instance, building a railroad requires a significant amount of upfront cash. However, unlike the App Store, adding an additional customer won't increase the cost of an online business. Apple won't charge anything for an additional user. Even 1 million more users won't necessitate Apple investing significantly more in the management of the App Store. What are the companies that Buffett invested in during the current inflation? Buffett didn't disclose every purchase he made, but he did highlight a few highlights. For example, he increased Berkshire's interest in the oil giant Chevron from $4.5 billion at the beginning of the year to $26 billion, making it one of the conglomerate's 4 largest assets. As part of its big purchase of Apple stock, Berkshire also spent billions acquiring 14% of Occidental Petroleum's shares in the first half of March. We already discussed the factors driving up oil prices. Additionally, people won't quit using oil. No matter what the price, demand will still continue to increase. The rise in oil cost will ultimately have an impact on everything else. That much is certain. The company will charge customers for that expense. Apple is the kind of business that has elevated technology to the level of necessity. The fact that we are in such a severe crisis does not mean that people will stop purchasing iPhones and MacBooks. The global economy depends heavily on iPhones. They have been the foundation of entire businesses. Car sales may decline, but not for iPhones or MacBooks. They won't cancel their Apple subscription either. Because of the new world they have created, Buffett willingly invests in Apple even if he steers clear of IT firms. His investment has been tremendously successful. However, even if you have this knowledge, you are unable to change anything. What are your odds of choosing a reputable business? Even if these qualities are significant, you must still review their financial documents to confirm that they have adequate cash. They don't have a debt crisis. They make a lot of money. They don't only need one stop to avoid bankruptcy. The organization has a visionary board, and the management is astute enough. All of them serve as markers for determining whether the business in which you are investing in is a wise one. However, the majority of people are unable to achieve it. It doesn't disrespect you. It's a simple fact that people are focused on perfecting their individual traits. The majority of people simply lack the time necessary to become experts in investing. Buffett has advised for everyone as a result. He says, "I do not think the average person can pick stocks," and he has been urging people to invest in the S&P 500 index fund for a long time. People have access to enough data to conclude that the S&P 500 has produced excellent returns over the long term. It has outperformed the majority of hedge funds and has shown to be an excellent inflation hedge. But you must have patience, because while the S&P 500 has occasionally performed poorly in the near term, over the long term, at least 10 years, if not longer, the index has shown to return about 10% every year. Therefore, if you're not interested in stocks or believe you are a better investor than Warren Buffett, you should know that your portfolio has suffered tremendously as a result of the Fed's rate hikes. It would be far better for you to follow Warren Buffett's advice and simply invest in an index fund. To be honest, you should still heed this advice, even if you choose individual stocks after carefully examining them. My investments make up a sizable portion of index funds, primarily the Vanguard S&P 500. In fact, it has increased since its June bottom line by at least 15%. What are your thoughts about Warren Buffett's last warning on huge inflation? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.